Okay, everybody, it is me, Gregory Mannarino. It is Sunday, June 12th, 2022. This, of course, is my newest segment of Markets to Look Ahead. It's going to be an interesting week, people. Let me just say that. Let us backtrack a little bit here. I always like to look back first. So last week, this market was actually on a good pace to finish positive. Then comes this Friday sell-off on the back of look, I can't help myself. This absolutely abysmal inflation report. You and I, we knew it ahead of time that this was going to be abysmal, but it took everybody by surprise. You can't make it up. No one else saw this coming, really, besides you and me. They believe their own garbage, and it's out of control in my view. But again, look, we all know that this market has been in la-la land for a very long time. Nothing makes sense. Valuations, PE ratios, forward guidance, none of it now anymore. It's a managed market that is inevitably and eventually going to melt down beyond people's wildest dreams. You and I already realized this. We've covered it a million times right here on this video, that a sell-off of 80% off the all-time high for the S&P 500 is not just likely, but is going to happen. Is it happening now? Well, we got to look at the 10-year yield, people. You all know that. I've explained to you how this works for many years now. The inevitable implosion in the debt market is going to lead to a massive sell-off in the stock market. And cash is just going to move. It's going to move from one set of assets into another set of assets. It's going to move into real things like commodities, for example, and they're going to skyrocket, in my view. You're allowed to have your own opinion on this as well. With regard to cryptocurrencies, yes, they've taken quite a wallop lately. And the only reason why this guy holds cryptocurrencies, I don't trade this stuff. You all know that. I own a lot of it. I've been buying for years. I started buying Bitcoin at around $2,700. And I intend to hold it until the inevitable meltdown here in the debt market, because I believe, yet again, not only is cash going to move into commodities, it's going to move into cryptocurrencies as well. Their market cap is going to balloon. Again, Greg Mannarino's opinion. You are totally entitled to have your own. Okay, I don't know everything. I'm just, when I come out here and I outline what's happening and what I believe is going to happen, this is just my best guess. We are all speculators. If you're in this market, or even if you're not in the market, if you're in the dollar, if you decide to be outside of the stock market, you're a speculator as well. People don't want to hold gold and silver these days. You have no idea how many people write to me, "Oh, Greg, I don't know why you keep pushing the gold and silver narrative. It's wrong." Okay, look, these people, let's not beat them up. They're entitled to their own opinion as well. But I don't know what they want. I mean, you don't want to be in physical metals. You don't want to be in cryptocurrencies. I can understand that. The cryptocurrencies is an extremely, we're talking off the Richter scale, volatile asset class. And swings of 80% are actually the norm. Okay, that's how it works. So when people tell me, "Hey, Greg, I don't want to touch the crypto space," I get it. Believe me, I've said this for a really long time, that spot, the crypto space, is not for everybody. Okay, and again, the only reason why I hold it is because I firmly believe debt market meltdown, cash moves. It's going to move into commodities. It's going to move into cryptos. That's my take on it. I've never wavered from this, and that's just, again, the way I feel. You're totally entitled to have your own thoughts on this, but there are people out here, they don't like anything, and they're kind of stuck in I don't know, king dollar, I assume. I don't know what they want to do. Meanwhile, they're sitting back watching the purchasing power of global fiat currencies, not just the dollar, evaporate right before their eyes with surging out of control inflation. Now, on Friday, this big massive sell-off in the stock market, what was that on? This unexpected, no one expected this, the inflation report to come in so bad. I'm here to tell you something. We're not done. We're not done by a long shot. Food and energy inflation, these two things, and shortages of both of these, it's a lock. This is going to happen. And on the back of that, inflation is going to skyrocket even further. Now, what rattled the market Friday, I outlined this prior to it happening, was what's the Fed going to do about it? Okay, what you can expect this week, as a matter of fact, Wednesday, the Federal Reserve is going to make their monetary policy announcement. They are going to raise the federal funds rate. Now, after Friday's abysmal report, there's a lot of talk that the Fed's going to be more aggressive starting this week. Many economists, who are generally wrong 90% of the time or more, they believe it's a strong possibility we're going to get a 75 basis point hike in the federal funds rate. I'm going to say this. Is it possible? I think it's a remote possibility. I believe a 50 basis point hike is already baked in, and it's going to happen. And I would not be surprised. Okay, look, I'm just going to throw this out here. This is Markets a Look Ahead. I would not be surprised to see the market rally after the Federal Reserve announcement if it's a 50 basis point hike. If it's a 75, and like I said, I think this is unlikely, 75 basis point hike, the market's going to hate it, okay? Because it's going to say, okay, the Federal Reserve is in fact going to be more aggressive. Now, what we need to do, you and I, sincerely, is as much as people love to focus on the stock market, stop for a minute. All right, look at its driver. The driver being the debt market, the 10-year yield. Now, Friday, I explained this to you. We saw a 10 basis point jump higher in the 10-year yield. We're also seeing a lot of interesting action across the whole yield curve. But to me, I watch the 10-year yield. It's the benchmark. It's what most people look at who study the market. Okay. Now, I have said to you all for a while now, we're going to settle above 3%. I have a number out here. I say we're going to hit around 3.25%. And where do I come up with this information? Where do I come up with this 3.25% number? Based on what I see going on with regard to the federal funds rate and what the Federal Reserve is talking about doing moving forward. Whether they do it or not, I have no idea. I'm talking about the Federal Reserve actually reducing its purchases of assets and, going out there, and I mean way out there, unwinding their balance sheet, which is, as all of you know, larger than the gross domestic product of most nations on earth. It's pretty freaking profound. In order for the Federal Reserve to do that, and I've covered this before just real quick, let me throw it out here, it would take decades. And understand, the Federal Reserve has no interest in doing that. The Federal Reserve, along with other central banks around the world, want to continue to inflate. They want to continue to buy assets with their product that they magically create out of thin air. I want you to ponder something real quick. The last meltdown of the stock market, what happened? The banks needed to be bailed out. I have said in the past, right here on this blog, that this time nations are going to need bailouts. Nations. So watch for this. Watch for nations to look to, let's say, the IMF, for example, for bailouts. Central banks are going to be more than willing, and this is what we're leading to, people. Look, an epic moment in time is rapidly approaching, and that is that implosion in the debt market, which is being driven absolutely by design by central banks. They are going out of their way to hyper, and if I didn't say it, hyper inflate a bubble in debt, only to do what they always do, allow that bubble to burst, and it's going to change the entire world with regard to, well, several things are going to happen here. The entire financial system is going to be replaced with a new one. I think that's pretty obvious. Now, the outcry behind this must be the most profound thing we have ever faced in world history. So the inevitable meltdown in the debt market, as I have said and I have never wavered, is going to lead to a resource issue. It's already happening. It's already happening. Food shortages, food inflation, energy inflation. Okay, this is something that I don't think it's a surprise to anyone who follows this blog. Okay. Well, so what we're going to get here is an implosion in the debt market. And when you want to talk about shortages, I'm here to tell you that a resource issue is going to develop that is going to be, well, it's going to be biblical, because it's going to lead to the largest loss of life, human life. It's going to lead to civil war, world war, people in the street absolutely in some kind of panic state, which they want to keep people in. Again, they want you afraid. Remember that. The goal here of the mainstream propaganda ministries is to keep you afraid of anything, to keep throwing things at you, to keep you off balance. This is what they do here. You're not being allowed to focus on anything. You're forced to finance crisis after crisis after crisis. And this is leading to a bigger crisis, which is, again, the implosion in the debt market. Wars, the expansion of wars, disease processes, whatever they want to throw at us. And they have a lot more coming. Again, they must keep this whole scheme going with regard to pulling cash from the future, and they're not going to stop. That's where central bank's power resides, in one thing. You know this better than anybody. In central bank's ability to issue debt. And if they have to, again, kill millions of people to do it, that's what they're going to do as they, again, fulfill their end game here to be the lenders and buyers of the last resort, to bail out entire nations, to bail out the world. So again, look, they've already established themselves, central banks, as the one world government that we've all been warned would come. Okay, that's it. They control the financial system. They control the world. You understand? It should be pretty evident to you. So what are we going to do about all this? Again, people, look. I've explained to you since I don't know how long. You need to be, if you're putting money to work in anything, even if you're just holding dollars, if you don't want to put any money to work, you got to consider that you're in the market. You're in the market. The market includes dollars. Okay, so if you say I don't want to be in the market, you're already in it. If you're out there getting up in the morning every day, going to a job or whatever it might be, how you earn those fiat bills, you're in the market. Okay, you're in the market as hard as I am, or any other trader or investor on the planet. Even if you're not in the equity market, you are involved in the debt market. The dollar is a unit of debt. Okay, every single fiat currency on the planet Earth is a unit of debt. These are, focus on this, unbacked liabilities being dispersed by bankrupt governments, and the real government is central banks. That's what they do. Okay, so don't think for a nanosecond that you're not in this market if you are not involved in equities, or if you're a person that doesn't even like gold and silver. And again, I keep getting more and more of these people. I've always had it. We all, you and I, we know how people have been. Oh, gold is an ancient relic. You don't need it. Silver's even worse. But lately, over the past, I would say almost year, and I get more email than you can possibly imagine. It's just crazy. And a lot of it, especially lately, is these gold and silver haters. They hate it. They don't want to touch it. They don't want to own it. I don't know why. I don't know where they want to be. They don't want to be in crypto, like I said. They don't want to be in gold and silver. They don't want to be in the stock market. They believe that real estate is in a bubble. Where do you want to be? Stay in the dollar and look at what's going on here. Its purchasing power is literally dissolving before your eyeballs. You got to take action, in my view. So you need exposure to commodities. That's huge in my view. And I'm going to say it again. Look, I got in a little trouble here lately. In fact, I have an issue here with the SEC. I think most of you know about it. So I can't say anymore. I really can't, at least for now, recommend anything. What I could do is tell you what I'm doing, which is what I always do. I am going to be buying more of a particular exchange-traded fund, ticker PDBC. Okay, I bought a whole bunch of it on Friday, and I'm going to be buying more of that as well. And at the same time, again, people, look, in my opinion, okay, this is my opinion. You need to think about what's right for you. I believe the most, and this is again my own belief. You can think what you want. The most undervalued assets in this world today are commodities, more specifically physical silver. I love gold. I love platinum and palladium. I own them all. But silver is my all-time favorite. Okay, if you look at the Dow gold ratio, do a little homework. I always ask you to do this. Just open up a search engine. Dow Jones Industrial Average gold ratio, gold silver ratio. You will see why I believe physical silver is the most undervalued asset in the world. Again, like I said, do your own research. Do your own homework on this. With regard to cryptocurrencies, you know why I hold this stuff. Okay, you know what I am. I don't trade it. I hold it. I'm waiting for the implosion. It's going to happen in my view. And you're allowed to have your own view too. Maybe some of you don't believe that the debt market is going to implode. I happen to firmly believe it's a hyper bubble beyond anyone's wildest dreams, and they're going to continue to inflate it by design to let that bubble burst. You understand? All bubbles burst at one point. No matter how much effort they put behind them to keep them inflated, at one point they all implode. And in my view, the debt market hyper bubble has created an environment of multiple bubbles. Some inverse bubbles as well. And I'm referring to, in my view, again, precious metals. Anyway, with regard to this market, people, again, look, it's all well and good and it's all fun to sit back and watch the Dow Jones Industrial Average, the S&P 500, the NASDAQ. Okay, great. As of yet, I mean, by definition, look it up for yourself. The S&P 500 is not even in a bear market. We are not 20% off of the all-time high. Doesn't mean we're not going to get there, people, but we need to watch the 10-year yield. If we keep seeing a succession of 10 basis point hikes, let's say we get to that 3.25, and all of a sudden we're another 10 higher, 10 basis points higher, another 10. That to me is the biggest tell in the world, in the history of the world, that the debt market implosion has begun. And the debt market implosion is going to melt the stock market down, and I mean melt it down. And then that cash is just going to move. Just going to move, people, into commodities and, again, in my view, into cryptocurrencies. I would love to hear from you. Let me know your take on this. I was writing down some stuff here. I want to make sure I cover this. So remember, Wednesday's the Federal Reserve. We will cover that here. Keep in mind, like I said, too, in the last meltdown, we bailed out the banks. Nations are going to need bailouts as well. I think I covered everything I wanted to. All right, people, look, that's it. Long video. I think it's a very important video. I calmly covered things here. I didn't make any silly faces or sounds. You know that I'm a little whatever I am. Anyway, look, I love you a lot. I mean that. We need each other. We have to come together. Do not let them divide us, because that's what they're trying to do. Stop being afraid and focus. Focus on what needs to be done here. I'll tell you something. What I would love to hear right here, and I know there are a lot of you, why do you not like physical gold and silver? I understand why a lot of you don't like cryptocurrency, but explain to me, those of you that don't like gold and or silver, why you don't like it. Do you think I'm wrong that these are massively undervalued assets here? Look, I am not too old, at least I hope, to learn a new trick, but maybe you can enlighten us all. I'm not trying to call anybody out. I just would like to hear an opinion from those people out here who don't like physical gold or physical silver. Tell me where I got this wrong. With regard to commodities, do you not believe we're going to see an explosion higher? I mean, look, we're already seeing it, but I think we have, what we're seeing now is just the opening act. I think we have a lot higher to go based upon that debt market implosion, which is going to occur. So again, look, I want to hear from you. Please comment here. I love to hear from you, and I will see all of you in the morning. Enjoy the rest of your day, and I'm just like out of here.